The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 8:30 a.m. Friday morning, 60 minutes to go until that opening bell. We got markets in positive territory to kick things off across the board. Right now, you're looking at the S&P futures positive by 11, trading at 34.96. Actually made it to a high of 35.09 overnight. Quite an acceleration. A little bit of volatility after that. NASDAQ 100 in the green by about 6 points right now, trading at 11,960. The Dow up 150 points, 28,617. Got the Russell up 11 points as well, 1577. Gold contract catching a bid, up $40. We'll jump over to gold to kick things off. Talk about some volatility yesterday. Chairman Powell coming out with a new approach towards inflation. They will allow inflation to go beyond the 2% target in an effort to hit that 2%, but they're not going to be as wary. 2% no longer really a ceiling, just the average they'll be looking for, and they'll be accepting. They'll have an acceptable range that will include above 2% inflation. You see the volatility on gold yesterday. We spike all the way up to 1987. In a heartbeat, we're back down to about 1914. And you see the run to positive prices starting at about 10 o'clock last night. We traded from 1928 gold contract hanging at about 1970 right now. You got silver up 66 cents, 27.85. Pretty similar chart for silver. The volatility yesterday up to 28.19. Last night at about 10 o'clock, we're trading at 27.13. And just like that, we're about 70 cents above that level at 27.85. Notes and bonds jumping over. We got a little bit of mixed action right now. The 10-year up 4 ticks at 138.31. The 30-year negative 3 ticks, trading at 174.21. And we are getting PCI, U.S. personal income, for the month of July, rising 0.4% in July. They were looking for 0.2%. That number coming out right at 8:30 as we came on the air. Market, pretty muted response so far. We're up about 12 points in the S&P right now, hanging tough on those levels. All right, in terms of what else we have going on, it is earnings season, and we're going to jump right into it with stocks making moves this morning. Okay, so first, Coca-Cola. They announced a reorganization. They're going to see the current 17-unit business structured change to 9 business units. 17 units, that is a lot of units. That is a lot of probably repetitive management probably going on in there. The realignment will result in an undetermined number of both involuntary and voluntary job cuts. Coca-Cola planning to offer voluntary buyouts to 4,000 workers. Coca-Cola this morning, jumping over to their chart, KO, Coca-Cola. There you see the pop from about 48.20. We're up at about 48.84, but we're up with the market as well, so not really sure if that's playing into things this morning. Back to the earnings front. Big Lots beat estimates by 5 cents a share. They earned $2.75. The revenue topped estimates as well. Comp store sales, how about this, folks? Up 31.3%. The market was looking for 28.1% comp sales, and they beat it with 31.3. They announced a $500 million stock buyback program. BIG is their symbol, BIG. And guess what? Expectations are everything, folks. We're up to 59. They come out with the numbers. We're down to 55.70, basically right where we were yesterday. The conference call beginning at about 8 a.m. Eastern time, as they're talking about that right now. Pretty strong numbers, but guess what? Some of these stocks, all right, jump into some context here. Folks, we just went from $10 to $55. They better be crushing it out of the park, okay? We talk about this in my newsletter a lot, Rocket Equities and Options, okay? Many of these equities coming into earnings are basically priced for perfection, especially equities like this, where you go from $25 pre-COVID to $10 at the depths of the market lows around March 23rd, and we are now at almost a 6-bagger on Big Lots. Of course, they better deliver some staggering numbers, and even when they do, the market may say, you know what, that was already priced in. Outside of maybe a Salesforce, which, yeah, they crushed it out of the park in a way that nobody saw coming. But Big Lots, basically flat on those numbers as the market saw that was going to be coming to fruition, and they did. Reminds me of Best Buy. We had a trade in Best Buy going on earlier this week. Best Buy, similar action in here in terms of, you expected strong numbers from Best Buy, and they delivered strong numbers for Best Buy. You just traded from $48 to $120, folks. So Best Buy comes out with their numbers, and what happens? Yeah, you trade a little bit lower because it was priced in, but all things considered, you just traded from 48 to, even after their numbers. Let me back it back out to give you some context, even back to their numbers. I mean, you're talking about more than 100% gain. My charts, come on. There we go. From 48, we're still trading at 111 on Best Buy. Let's jump to CRM, too, because quite the pop, folks. I mean, this stock just doesn't stop. From 115, you come into their earnings at about 116. You trade to 176. Yesterday, we paired some of those gains, but guess what? The market said, you know what? I'm a buyer of CRM. You trade down to 260, you finish the day at almost 280. Added to the Dow, crushed it out of the park, CRM. All right, what else we got going on? Hibbett Sports, the retailer of athletic fashion apparel, quarterly earnings $2.95 a share. The estimate was only $1.15. Revenue well above forecast. Comp store sales, how about this one? Up more than 79%. Wowzers. E-commerce sales more than tripling during the quarter. Now, here's the thing. Always keep in mind, right? Comp store sales, that's a big number because you're comparing it to the sales you did at a similar store, not a similar store, right? Stores open for 12 months, basically, is what they usually have. E-commerce sales tripling during the quarter. Well, if Hibbett Sports did $1 million in e-commerce sales last year, then that would mean that they only did $3 million in e-commerce sales. Be very careful with percentages off of low numbers. Many of these companies' online sales are still dealing with very low numbers in prior quarters. Nonetheless, strong numbers from Hibbett, H-I-B-B. And there you see the pop from 30 up to almost 36. We're trading right now at 32.45. Whoops. And to see some context on Hibbett, there you go, folks. We're back above COVID levels. We're going to open at above 32.50. The high previously was 31 this year. You made it all the way down to $7. $7. Talk about some volatility to the upside. All right, retail, Gap out with their numbers. Quarterly loss of 17 cents a share. The market was looking for 41 cents, so they beat that. Revenue also beat as it benefited from pandemic-related shift to casual clothing and also sold $130 million in masks. Remarkable. All those Gap-branded masks, I guess, doing well. And this morning, we're pretty much muted on that. From 17.38, the bid ask right under that level at 17.21. We were all the way down at $5 on the COVID lows. And to see where we are this morning, a little bit of volatility up to 19.25 on some strong numbers, though. The conference call started last night, pairing some of those gains. Gap basically flat this morning. And as we're talking, you're seeing the NASDAQ 100 futures slip into the red. We get the S&P off a few points from where we were earlier. And we got to check in on the VIX. Some interesting action on the VIX yesterday. There is some fear in this market, folks. Be careful. It was not that big of a sell-off yesterday in the markets. Yeah, the markets sold off, okay? But the VIX spiked from almost 22 to 27 in a heartbeat and then gave it back. I got some emails from subscribers yesterday saying, hey, did you see the volume on the UVXY? The ProShares Ultra? I mean, look at this volume spike on the UVXY on a daily basis, folks. There is some fear when this market starts to trade salt. We'll pull this up and check it out a little bit more after the break. Stay tuned, folks. We'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the S&P is positive by about 9 right now. NASDAQ futures flat. Dow up 133. You see the chart I have up here on a daily basis. I mean, pretty remarkable. We're talking about the best August, folks, since 1986. That's the headlines this morning. Quite a market run that we've had across the board. When you look at the numbers that we've had, S&Ps, I mean, it's a one-way rocket ship, folks. We had that high in early June. We did get a pullback originally, but we're up about 6% just for the month in August, which is just crazy when you think about the returns that's following, right? April, now this is talking about S&P monthly returns, okay? April, 12.7%. May, 4.5%. June, almost 2%. July, how about 6%? August so far, 6.6%, and we're 10 points higher coming into the morning. Now, we got one more day to go, August 31st being Monday. That'll wrap it up. A pretty remarkable action, folks, as this market. Now, I bring it up because we were just talking about the VIX, okay? Really interesting action last night when you look at, I mean, look at this chart, right? It's a one-way rocket ship, folks. Yeah, we've had a little bit of a negative action, but man, oh man, I mean, you even pick, let's zoom it in from where we were on the lows of June 29th, okay? And I hadn't even done this. How many red bars we got going here? 4, 7, 10. 10 red bars since June 29th. That's 2 months, folks, okay? Yesterday, a green bar, okay? Now, we'll jump over to the VIX real quick. Yesterday's action in the VIX, now zooming this in, here is the 29th or thereabouts, okay? Check out this rise that we've just had in the VIX in the last 3 days, folks. Pay attention to this. This is a dicey scenario. The last time that we've seen this, you just saw the VIX go from 2092 on Wednesday, correct? Yes, on Wednesday, to a spike high of 2709 yesterday. We're sitting at 25 right now. And meanwhile, I just read you the numbers. The numbers are up across the board. Why is there fear being priced into this market? Why are people paying for all this premium to protect themselves if the market is so easily just rising on almost a daily and monthly basis? Well, the reason why, folks, is because it might not have the type of conviction that you think it may. Now look at the UVXY. As somebody had emailed me, one of the subscribers, okay? Huge volume yesterday. All right, people are paying attention to this. You just went from 1875 to 2369, and you did, what is the volume there? Yeah, 73 million shares on yesterday. The last time we've seen the VIX lead as we come into election season in a big way, you just had the RNC wrap up last night. Okay, politics going to become much more on the forefront as we're approaching about 60 days out from election day, all right? Something you want to keep on your radar, because I saw that VIX last night as well, and I said, man, that was quite a spike intraday we got in the VIX. To zoom things back in, this is one of the biggest things I watched, okay? You spiked from 2350 to 27 in a heartbeat, okay? Now to bring it back to the S&Ps to see the correlation that we got, yeah, there was a pretty quick sell-off, but man, people are very worried right now, okay? That's what whoops, we didn't quite get it. When market participants saw this sell-off, okay, and here's the sell-off that correlated, okay, you spiked down to basically in the S&Ps from about 34.97 to 34.65. You regained it all in a heartbeat, but when this happened, you saw a rush to buy some protection, and you saw a rush that people were willing to pay up in an immediate fashion for that protection, which means that they think there's a very distinct chance that there could be a rapid sell-off coming, because they don't want to wait. They don't want to wonder whether it's going to be a 1% pullback, a 2, a 3, a 4. I mean, I just read you the numbers, right? April was almost 13%. May was 5%. June was 2%. July, we made 6% in the S&P. In August, we're up almost 7%. Okay? So the market's saying, you know what? We might get more than a 1% pullback. And the market, you can't always buy the dips. The last time we saw the VIX leading things, okay, the market got a little dicey. So if you got some big positions out there, some big profits, be very aware right now that the S&P is sitting at 3,500 from the lows of 2174. And meanwhile, we're dealing with continuing claims of almost 15 million people. We're dealing with initial weekly jobless claims of 1 million people. And we're dealing with a virus that shows no indication that it's going to stop anytime soon. Now, many companies benefiting from that in terms of the stay-at-home. We just saw the likes of even Gap selling $130 million in masks. Walmart now in on the TikTok deal as Walmart's charged higher. You don't have to explain Amazon, Microsoft in the TikTok deal as well, Apple. But another statistic was that 1 out of 5 S&P companies are down 50% from the highs that they had pre-COVID. That's right, 1 out of 5 S&P companies. So yeah, it's not all roses when you get into those, all the companies. It is many times roses on the FANG stocks, but that's something I'm really watching on my radar. You got to have those spikes up on your back, folks. And when you see this, the VIX immediately begin accelerating higher to almost 28, I mean, look at this chart on a daily basis. If I told you that yesterday the VIX went bonkers for a period of time to almost 28, you'd say, wait a second. Yesterday was a great day in the market. You opened at 34.79, you closed at 34.87, and it was another green bar, the sixth consecutive green bar in the S&P. I mean, you back it up. We only have 3 red bars in the S&P going back for the entire month, folks. And you just saw the VIX spike to 28 in a heartbeat, okay? This is a dicey scenario. Things might be getting a little frothy. I really haven't talked about this that much because it hasn't been this drastic, but we're now far above where we were pre-COVID. We're on 3 red bars for the entire month of August in the S&P, and the VIX is showing signs that people are a little worried as we get a little frothy at these highs. So pay attention to that. All right, what else we got going on? Back to the earnings front. HP with their numbers, beating estimates by 6 cents a share, quarterly profit of 49 cents. The computer and printer makers' revenue above estimates. HP's results got a boost from a surge in demand for laptops as people were forced to work from home during the pandemic. HPQ is their symbol. Going to be really interesting to see. Obviously, there's been a flush to whether it's your home office, right? Whether it's Lowe's, Home Depot, that type of thing, improving the home. How does that trend continue once everybody buys the computer, once everyone builds the deck on their backyard, once everyone buys the hot tub in their backyard? The housing market's on fire. That one's not going to slow down anytime soon, but I just wonder fundamentally how this is all going to play out when you have companies like this who are seeing a huge acceleration, but how does that play out when maybe you're going to see a slowdown in the months to come? Workday. 84 cents a share their earnings, beating the 66 cents a share estimate. They got cloud-based human resources and finance, good area to be in. They also increased their revenue forecast. That's always a good thing to see. Not what have you done for me lately? What are you going to do for me in the future? And there you go, folks. From 215, you pop almost 15% up to 245. We're trading up $24 this morning, about 12% in the positive to 240 for Workday. All right, checking back in on the S&Ps. We're just hanging tough on that number. We're about 9 points in the green on the S&Ps, just under that 3,500 price point. We accelerated higher to 3,509 at about 11 o'clock last night, and looking to open in the green in the market 40 minutes from right now for that opening bell. Stay tuned, folks. We'll be right back in 3 minutes to finish up the program.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P's just hanging positive by 9. NASDAQ futures slipping back into the green, up by about 6. Dow up 126. Gold contract holding on to the gains, up $30 at 1962, excuse me. In our Tiger's Den over in that YouTube chat, they're talking about the dollar this morning. The dollar getting hammered, down 66 ticks at 92.34. That's the dollar index. Pulling back, that giving a bid to those commodities for sure. The dollar continuing. Jumping into what we have going on next week for earnings. So Zoom Communications, Zoom, they've been quite the highlight during this pandemic. Jumping over to Zoom shares. They are out with their numbers on Monday after the market close. Now, Monday of this week, Zoom had a little bit of a problem. The network was down, but guess what? Give it 24 hours and the market forgets about that, folks. Zoom back at near $300. You want to talk about some craziness, folks. Pre-COVID, you're trading at about 125, really. We'll back it up, really about 100, I guess. Zoom never really pulled back as the market realized the profit potential, and which spent a one-way rocket ship up to 300, and they're going to be coming out with their numbers on Monday after the bell. On Tuesday, some of the numbers jumping out. We got H&R Block. They'll be out with their numbers. Build-A-Bear Workshop, they're out with their numbers as well. Wednesday, what we got, and we're nearing the end of earnings season here, so they're kind of trickling down. Wednesday, in terms of who is on the radar, Rocket Companies, they're just out with their IPO. Rocket, they're out with their earnings. Macy's will be out with their numbers before the bell on Wednesday as well. Jumping over to Thursday, we got about 41 companies' earnings. Broadcom, AVGO, they'll be out with their numbers Thursday after the bell. Michael's companies, MIK, Campbell Soup on Thursday. What else we got? Anybody good in there? Yeah, that's about it. And Friday, no real action as well. Let me just pull it up. Yeah, no real action on Friday as well, but we got some companies in there. Macy's, the retail sector. Talk about some woes recently, see what they have to say. Macy's just hanging at all these lows, folks. Stay tuned. We got our man Larry Pesavento coming up live next. S&Ps, NASDAQ, Dow, Russell, all in the green, gold as well. Stay tuned, folks. Larry Pesavento, he's coming up live next. Thanks so much.